Tesla stock is at almost 8% right now as I'm filming this video. Tesla has been on an absolute tear the last few days. In fact, it's actually up 33% from its March lows. So there's been some amazing growth, and the stock did dip right here, February and March. And what we've been doing is I've been just buying, right? I've been trying to buy the dip here, and we bought 20 shares at 680, 30 shares at 619, 25 shares at 578, and the most shares at the lowest at 565, and then bought again 30 shares at 616. So what I try to do when I'm buying the dip, it's very hard to mentally do this, but I try to buy more and more shares as the market goes down. That way I average closer to the bottom. Had a little paper hands here, but then I got back on track. So is Tesla something that we should keep investing in? It's a big percentage of my portfolio. So what we're going to talk about are the reasons why it's been rising, if those have any merit to keep the stock rising further, and what could cause a downturn. So with our Tesla stock, we have around 600,000 in it. This is one of the accounts, and then Robinhood accounts for the other. Plus, we have more in ETFs, which include Tesla as it's part of the S&P 500. More in another video on that. The reasons for the stock to rise and the reasons why they have risen, first off is the deliveries. So some of you guys know about how they've delivered way more vehicles than was expected. The key with any kind of news is that is the news more or better than what was expected? That's all that matters. It doesn't matter if they did what the news said. What matters is, did the expectation get beat? And that's what happened here. So they were expected to deliver less cars than they delivered. That's all that it takes for things to rise. Tesla was expected to deliver 168,000 vehicles, but instead Tesla delivered 184,000 vehicles. Now, deliverability is really important, right? How many vehicles are they delivering? But to me, that's actually not the most important thing when it comes to these kinds of reports. It's actually the production side, because the truth is, in my opinion, is that Tesla is not demand constraint, meaning that demand isn't the bottleneck. Instead, it's the supply. How much they can produce is the bottleneck. So the next news that happened is a couple days ago, Dorsheimer upgraded his rating on Tesla. So this is someone from Canaccord Genuity, an analyst, and his target went to 1,071. That assumes around a 50% growth from the high 600s as it was, I think, around that time. His target before was 419. So that's huge, more than doubling your price target. He says that the price target and stock multiple, so like the PE ratio, might be rich, as in very high, but here's the thing. Tesla holds a several-year lead and is now expanding aggressively into storage. So what he's talking about here with storage is energy storage. Now, over and over again, what happens is we learn that Tesla is more than a car company, right? So this analyst sees a several-year lead, and what I'm seeing in most of these different industries is not just a lead, but it's actually an expanding lead. So they are expanding faster than it is getting to have other car manufacturers even get to the point that they are now. So it's not like they have to catch up to a steady Tesla's just waiting there along the path and VW is going to catch up. But the issue is Tesla's running, and Tesla's running faster than the other automakers are going. So this is a several-year lead in many of the different areas. Over and over again, we hear the same thing, right? Wait, Tesla is not just a car company? All right, so they're a software company too. Okay, I get that. Wait, they're kind of like, they could be like Uber and have autonomous driving and do ride sharing? Okay, wait, they're an energy business too? Wait, they can disrupt the energy business? Wait, the highest revenue companies in the world are energy companies? Right? There's a big lag in the market, and to me, that's what an investment opportunity is when there's a big lag between what you understand or believe to be true and what the market understands and believes to be fact. A ton has to do with education. You can call this like a learning curve. So to kind of look at how this has affected and if this is going to affect the future of the stock, let's look at other big curves. If you're interested in growing your financial education and you want to learn more about Tesla or the stock market or investing in general, make sure to subscribe. I'd really appreciate having you on as a subscriber as we grow this channel together. Like this video if you do like this video, that way we can get this in front of more people too, and let's get started. So one of them happened in Autonomy Day. So in Autonomy Day, Elon Musk in 2019 did this really cool presentation of how his cars are going to be autonomous and how there's going to be ride sharing and how this is a huge industry. The potential is ginormous. What was the feedback? Well, CNBC wrote that Autonomy Day served to distract from Tesla's recent operational challenges ahead of the company's first quarter earnings report. It served to distract everyone. Elon Musk did what he does best on Monday, which was he presented a bold, visionary promise that only his most loyal followers would take at face value. And this is, by the way, when he talked about the new chip, which is a huge, huge thing. And he talked about Tesla's autonomy system and how they can have millions of robo-taxis and how robo-taxis could generate owners $30,000 a year in profit. This is the first time that a car can actually appreciate in value, because all of a sudden with software updates, a car can now start making money and start picking people up when you go to sleep. So this is pretty crazy. Well, what happened for Tesla stock? Well, this was in April that this article came out, and it was pretty brutal. April 24th, 2019, about how Elon Musk sent a 2-line email telling people how great Tesla's Autonomy Day was, but the plan had lots of holes and it was just a distraction and just for his loyal followers. Remember, this is April 24th, 2019. So what the heck happened April 24th until today? Well, you're at 1,500% growth. Pretty friggin' insane. So there's always a lag, but what happened on the day? Well, here's actually what happened on April 21st in 2019. The news came out. The presentation happened. They didn't know how to react. By the way, the stock was at $52 per share when you factor in the split. And the market just went down, right? It didn't know what to do with that kind of information. Now, the same thing happens on the next big day, right? Battery Day. Battery Day in 2020. Tesla's Battery Day ended with no battery. Holy moly. And lots of unanswered questions. Look at that. Elon's not happy. Was that taken from Battery Day? I don't think so. Maybe it has, but things get taken really out of context. So I came out with it confused. I think this is a great word choice about what they're doing with the battery supply chain. So a big thing with this is they're going to lower the cost of batteries. They're going to fix the bottlenecks that have to do with the materials, with the processes, with making them cheaper, which is a huge aspect of lowering the cost for every vehicle, which is the hugest aspect with increasing the profitability for each vehicle. So this is a huge, huge deal. But what happened on those days? So a sell-off, right? 300 went from 450 to around 390. So a big sell-off here. And this is common. Like, this is what happens. Now it's more clear that Tesla is going to dominate autonomy, dominate battery technology, energy storage, and they're getting into more and more industries. And basically they're creating this vertical integration where they don't need to worry about getting a chip from Intel. They don't need to worry as much as relying on batteries from different suppliers. Instead, they're trying to build these things in-house as much as they can. They're still expanding so fast that they can't build enough supply, so they're still going to be buying batteries, for example. But the power of creating this vertical integration is really unique, because you have to understand that the car companies don't get the value of, say, building the batteries if they don't build them themselves, or let's say gasoline and filling up the cars, whereas Tesla has the supercharger network. So this is a vertically integrated company, and with the energy storage aspect and people starting to learn more about that, that might be an accelerator for the stock. But the biggest thing that's going to accelerate the stock from here is actually going to be their earnings. They already had their deliverability, their delivery numbers, but they don't have their earnings. So what that means is we know how many cars they produced and sold, but we don't know how much money that made them in both the revenue and sales numbers. So we have an expected amount of 10.2 billion, and the actual earnings per share, which is super, super important for all the ratios and how all these analysts try to make sense of valuation. So this is what is going to matter. What we can see here is that if the Q3 earnings has this positive green arrow, the price went up. And when Q4 had a down red arrow, meaning they didn't beat expectations, the price of the stock went down. This is a huge catalyst. We can see here revenue numbers as well with the expected revenue, but profitability is really important. And that's where the earnings per share aspect comes in. So we are on the sidelines, have to wait. The earnings per share estimates, however, those are going to change based on the delivery numbers. So those delivery numbers changed what everyone realized, hey, look, they actually sold this many cars. That's going to change all of the estimates from the analysts. So here, all that matters is, do they beat expectations or do they not? Did they actually have a better profit margin on their cars than is expected? That is really what it comes down to. But also you have to understand that the profitability of the company is really, really based on how much they're spending, right? So if they're spending on massive expansion with different factories, that's going to cut into the earnings as well. So you have to take these things with understanding there's short-term gains and losses, and then there are long-term trends. And I try to focus on the long-term trends, but it'll be interesting to see what happens to our stock portfolio when the Tesla earnings come out. So today we're up 35,000 just from Tesla, and it is the biggest single stock that I have on my portfolio. So hopefully you enjoyed this video. Thanks so much for watching. Leave me a comment if you want more Tesla videos, or if you want more straight up just overall investing videos. I'd love to know your feedback. Thanks so much for hanging out. This is AI, and I'll talk to you soon.